Every week in Florida, someone buys a business using a free template they found online and unknowingly signs up to pay another company's debts. They thought they were buying a cafe, a medical practice, a trucking company. What they actually bought was a lawsuit with a logo on the door. In this video, I'll explain why businesses structure these deals as asset purchase instead of stock purchase, the absolute essentials of a Florida asset purchase agreement must contain, and the exact places where free templates fall apart. And near the end, I'll show you the one missing document that can make your entire purchase legally meaningless, even after you've wired the money. All right, let's dive into this one. I'm Santiago Cueto, board-certified international law expert and best-selling author based right here in Miami, Florida. Now let's start with a question every buyer Googles at 2 in the morning. Asset purchase or stock purchase? Now here's the reason this matters. When you buy the stock of a corporation or the membership interest of an LLC, you are buying the entity itself, every contract it signed, every tax it didn't pay, every lawsuit nobody told you about, the good, the bad, and the hidden. And it all comes with keys. But when you buy assets, you flip the script. You pick the things you want, the equipment, the name, the customer list, the lease, and in principle, you leave the liabilities behind with the seller's old shell. Now you're probably thinking, perfect, I'll do an asset purchase, download a free template, and I'm protected. Well, that assumption is exactly how buyers get destroyed. Because what the free template gives you is what I call the liability mirage, the appearance of leaving the seller's debts behind with none of the language that actually makes it come true. And here's where Florida law makes this dangerous. Florida courts recognize a situation where a buyer of assets gets stuck with the seller's liability anyway. Now, if your agreement implies you assumed obligation, if the deal looks like a de facto merger, and if your company is just a continuation of the old one, same location, same staff, same operations, new name, or if the deal was structured to dodge creditors, a free template doesn't defend against any of that. A real Florida asset purchase agreement, on the other hand, attacks it head-on with an excluded liabilities section that spells out in writing exactly which obligations stay behind, and an assumed liability section that lists the only things that you're taking on. Now here's the trap most buyers never see coming. Taxes. Under Florida law, the buyer of a business can be held responsible for the seller's unpaid taxes, including sales tax. Now, that charming Miami cafe you're buying? If the seller skips sales tax remittances, the state can come after you. The protection is a tax clearance from the Florida Department of Revenue before closing, something no free template will even tell you to demand. But liabilities are only the first failure point. The second one costs sellers just as much as buyers. Imagine for a moment that you buy a logistics firm in Doral, Florida. 90 days later, the seller opens a new company, 2 exits down the highway, and calls every company on the list that you just paid for. You're thinking, he can't do that, we had a deal. But unless your agreement contains an enforceable non-compete, he absolutely can. Florida Statute 542.335 governs non-compete agreements, and here's what works in your favor. Florida treats non-competes signed as part of the sale of a business far more generously than employee non-competes. Courts will enforce longer time periods in broader territories when the covenant is drafted to the statute's requirements. What the free template gives you instead is a naked non-compete, a generic paragraph with no defined territory, no tie to the goodwill you purchased, and critically, no purchase price allocation. And that allocation piece is the part almost nobody talks about. The IRS requires both buyer and seller to allocate the purchase price across the assets, equipment, goodwill, inventory, and the non-compete itself, and to report it consistently. That allocation drives how the seller is taxed and how fast the buyer writes off the deal. A free template skips it entirely, which means the buyer and seller file conflicting numbers and the deal becomes audit bait by the IRS. Now, if this is opening your eyes, do me a favor and hit that like button and subscribe. I break down Florida business law every week so you see these traps before you signed, not after. Now, let me show you the failure that makes everything else irrelevant. First, inventory. You agree to buy that cafe with inventory included. Sounds simple, right? Then you take over and discover the walk-in cooler is half empty because the seller stopped restocking the moment you signed. A real Florida asset purchase agreement handles this with a physical inventory count at closing and price adjustment mechanism. The price moves up or down based on what's actually on the shelves the day you take over. Now, free templates, you use one vague line, and that line is worth exactly what you paid for the template. Nothing. But here's the failure that beats them all, and I call it the ghost closing. When the money moves, the handshake happens, and legally, nothing transfers. The asset purchase agreement is a promise to sell. The transfer itself happens through closing documents, a bill of sale conveying the equipment and inventory, assignments of the lease and contracts, usually requiring the landlord's written consent, title transfers for every vehicle, and assignments of the trademarks and intellectual property. Buying a medical practice, licenses and provider numbers don't just ride along with the furniture. Buying a restaurant with a liquor license, that transfer runs through the state on the state's timeline. Now skip those documents and you've paid full price for a business you cannot prove that you own. So yes, the asset purchase is the right structure for most Florida business buyers. But the structure only protects you when the agreement is built for Florida. Excluded liabilities, a tax clearance, a statute-compliant non-compete with a real allocation, a closing inventory count, and a complete set of transfer documents. The free template gives you none of that. It gives you the liability mirage, the naked non-compete, and a ghost closing. 3 ways to lose everything you think you just bought. The money you save on a template is the most expensive money you'll ever keep. Now, if this video saved you from a bad deal, hit like and subscribe. I'm Santiago Cueto, your Florida business attorney. Now watch this next video where I explain the real strategy behind settlement versus trial in Florida business litigation.